To the Revolution.Aero town hall. Today, we're absolutely delighted to have four very different investors who are going to be taking through how they're looking at the cycle, how they're looking at the market. They don't need any introduction, but we're delighted to start with Cyrus Zaghari, co-founder and managing director of Up Partners. Cyrus, how are you?
I'm doing great, Alistair, and always great to see you on your little space chair there with the Revolution.Aero banner behind you.
It's not a banner. We had every room in our house decorated with different wallpaper. Before we even knew about COVID. So, Cyrus, everyone on the call probably knows you. You've been following this market closer than almost anyone I know. Do you want to just introduce Up Partners quickly?
Sure. Up Partners is an early stage venture firm that's investing in what we call key enabling technologies that support a multidimensional future. So for us, what that means is investing in the picks and shovels of moving people and goods in a multidimensional world. So things like sensing, things like propulsion technology, things like IoT, additive manufacturing technologies to really support not just aviation related mobility, but mobility more broadly. But our background as partners and as an organization, many of us is from aviation and investment sort of converging around this really exciting new sort of second industrial revolution as it relates to moving things.
And I think what's really interesting about you is you've been through the light jet revolution. You were and then you stayed in the jet market. And then you were one of the first people to really start getting excited about this market on an investor point of view. It's changed a lot, hasn't it, since you started looking at it?
Yeah, I mean, it went from, in a matter of probably 12 to 24 months, to a fringe concept to mainstream Wall Street. And it's pretty exciting. And one of my partners, Adam Grosser, his company was responsible for inventing the cable modem and launching the first broadband network throughout the United States. And his comment and feedback is that what we're seeing today is really not all that different than what we saw back at the beginning of the internet, where you had this very slow bubble kind of happen, and all of a sudden, boom, you had this inflection point, and you saw some bubbles, economic bubbles, and perhaps we're in experiencing one of those now with all the SPAC craze that's happening. Maybe we're not. I mean, I don't think anybody truthfully knows, but it certainly is exciting to be a participant on the field and as well as an observer of the game.
So, talking about SPACs, are they positive for the industry?
I think so. I mean, I think here's the one thing that I don't think is really talked about a lot with SPACs for the benefit of this industry. The Joby SPAC and the Lilium SPAC that's been announced and the few others, what they do is significantly reduce the risk of failure for the company by virtue of handing, here's $1 billion, go figure this out. You can make a lot of mistakes when you've got $1 billion of dry powder to go work through. So for the investors, for the employees, for the customers, what these SPACs have done, and really just access to the public markets, is provide a much bigger parachute to support these, new technology companies that are out there launching. Undoubtedly, there's the other side of SPACs, which, creating these crazy valuations for companies that have no revenue, have no sort of product that, has a lot of investors scratching heads. But I think in the long term, forget the transient state. I think SPACs are really good for the market to getting entrepreneurs and the public more access to these really cool, interesting technology companies. And the companies that are really getting disintermediated through this is really growth equity investors and larger private equity companies that would have been in the B, C, D rounds that have effectively gotten pushed aside for the public market. So in general, they're very good, but I think still time to see what exactly this looks like as we go forward.
You've worked at an aircraft manufacturer. How much, you talk about being giving you a great parachute, but is it actually enough to get you to certification?
Well, enough is relative. I think, and I'd be curious to have, Beckett from Boeing and Dean, some of the other folks that have had, and of course, Human, who's everybody on this call has got a lot of relevant experience here. as it relates to aircraft certification operation. But I mean, you solidly need $500 million to $1 billion to go take one of these new clean sheeted design products to certification. But that's only one part of it. There's also building the production capacity, and it's building the maintenance capacity, and there's building the training capacity. And so I hope so, but I think what will likely happen is if companies like Joby and Lilium and all the other ones that have announced going public, they're going to start producing results that are going to allow them to have access to more capital as they are doing what they said they were going to do. And if they don't, the markets are going to speak for them, be it that they won't be able to raise debt or they won't be able to sell more shares or whatever it may be.
You're targeting enabling technologies as opposed to OEMs. Are you surprised that the SPACs are all focusing on the OEMs, or is it because you need a sexy story to sell?
I wouldn't necessarily say that the SPACs aren't targeting key enabling technologies. They're just not showing up as obvious that they're aviation-related things. I think we're going to see certainly a lot of inherent human reaction to the concept of investors investing into flying cars and having really incredible stories like, with JetBlue being involved with Joby and humanity being excited about that particular future and all the stuff that Boeing's working on and so on and so forth. So I think that's really good. They're the pointy tip of the spear that is going to pull a lot of investment dollars into the infrastructure and key enabling technologies behind to support it. So no, I'm not surprised that they would lead first, but it's a forcing function for additional capital to come to the markets to support these large SPACs that have already gone out.
And with the large SPACs going out, is it going to be easier for startups to find investment? Maybe not. Maybe, will we see the VCs going down from the B, C, and D rounds?
This might possibly be the most incredible time to be a startup founder. There is such competition from early stage venture capital firms and investors to get in and to provide funding to innovative companies. I mean, the Y Combinator demo day that just happened a few days ago or last week, I mean, the number of term sheets and interest of investment to the 300 companies that presented was out of this world. So I think generally that's a result of, a couple $1 trillion in banking accounts today that weren't there a year or two ago, and this potential for inflation that has large holders of capital more interested in owning assets than owning, just pure cash. And that's getting forced into companies, into the stock market, and into other sort of hard assets.
What advice would you give to a startup looking from early stage?
I'd be cautious about another Me Too. I mean, there's anybody that's been tracking this eVTOL space, there's 400 companies out here that are doing something in that space. I don't think we need another eVTOL company. But I do think there's other applications and use cases and business cases that are pretty interesting to be explored. So I'm generally somewhat allergic to hardware companies, like what we're talking about with these big drone companies and eVTOL companies from an investment perspective. But I think software solutions, deep tech solutions, there's a lot of entrepreneurs and soon to be entrepreneurs out of the Stanfords, Caltechs, MITs, Purdue's, Georgia Techs that would have maybe started a company that was in the automotive space or other sort of industries that I think now are starting to get excited about taking advantage of multidimensional mobility or advanced air mobility. So I was kind of a smattering of pieces of advice, but I think it's a great time to be a founder. And I'm excited to have those founders, if any of them are listening, to reach out to me or any of my colleagues on the call here to see how we can be supportive of them growing their businesses. Do you think
you're going to find it harder to make investments now?
Say that again?
Is it going to get harder for you as the markets become sexier? You, Dean, actually Becca and Amy have been around a long time looking at this. Is it getting more competitive and harder to find investments?
There's a couple of factors that would drive that question. One is volume of deal source. So we're looking at about 50 deals a week right now. So from that perspective, there's no shortage of awesome deals to look at. which, as any venture investor, you want to be looking at as many deals as possible and certainly get the best deals as early as possible to invest to grow with the company. Is there competition to be investing in the best companies? Absolutely. The hottest deals are always going to be attracting the best investors, and it's going to be, you have to fight to get into. But so far, we've been pretty pleased with our ability to find the deals that we're looking for and bring in the sorts of partners that we want to co-invest with us to go forward. But I think that the pie is just getting bigger, that more investors will be able to support more companies as the industry continues to grow.
You talk about the dot-com bubble of 2000. Have we hit the Gartner peak of inflated expectations yet?
I don't know. That's a good question. Give me till the next town hall to think about that, because I haven't analyzed that question for a while. Maybe I'll pass it to Dean or Amy or Beckett to give their thought, or Human, as to their perspective if we're past the peak and into the trough. I don't think we're past the peak, actually. Now, come to think of it, I think we have to have some crash and burns of some of these pretty notable companies. I don't wish that for anybody, but that's where you start to see the trough of disillusionment happen, where reality hits sort of ambition, and that where investors get scared and they pull away. So I think we're a ways away from that happening, if it ever happens. I hope it doesn't. I hope that we're able to benefit from this continued flow of capital into the space, which creates a really virtuous life cycle of more entrepreneurs, more strategics, more regulatory and government support, and we may hit a zone where it just keeps spinning in a positive direction.
We've got very frothy equity markets at the moment. Do you think a poorly executed SPAC listing could trigger something? If one doesn't work, do you think that could cause it? I'm thinking of, I don't know, we had Boohoo fashion retailer in 2000s, or Toys.com.
Absolutely. I mean, I think that's the comment I was trying to articulate earlier, is if we have a few, big notable stories that go a different direction, it's going to make it challenging for new founders, in companies that are kind of further along or earlier in the process, to not be adversely affected by them. Hopefully, we are overwhelmed with more good news than bad news. I'm generally an optimist. I'm generally excited, and it's hard to get me become a Debbie Downer on this sort of space and industry. So I'm a bit biased, but I think some poorly executed SPACs, some controversy, some regulatory headwinds could certainly become an issue. That being said, I think there's a lot more tailwinds than there are headwinds for us right now.
Awesome. And looking at all the investment opportunities you're seeing, are there any areas where you think have been underserved or haven't been covered that look particularly interesting at the moment?
I think that the two areas that are really interesting to me is around sensing, new sensing technologies, be it LiDAR and sort of the sensor fusion as we come into more interesting autonomy stacks. There's several really, really cool companies that most of my colleagues are probably familiar with that are creating full stack autonomy solutions that would be plug and play into traditional aircraft. That's really exciting. And I think that there's going to be some big investment opportunities into companies in that space. Those stand out. I think, we've talked a little bit about hydrogen in the past. I think that, Airbus has already said, hey, we're going down this path. I don't want to speak for Beckett and Boeing, but I imagine that, Boeing is paying a lot of attention to this space as well. And it doesn't take, more than a few big individual decisions to trigger the entire industry to go that way. So I think hydrogen is super exciting, super cool. There's a few companies in the space. I don't think it's gotten quite enough attention, or there are enough companies in the space that are developing technologies there. Those are a few that stand out.
That's brilliant. In fact, we are planning a hydrogen town hall coming up. But yeah, that's great. Thanks so much, Cyrus.
My pleasure. Thanks for having me.
And now I'm delighted to go to Amy Bear. Amy is at Jetblue Technology Ventures, which is separate to the airline. So she's not here to ask questions about routes or baggage policy. Amy, how are you?
I'm great. Thanks for having me.
Thanks. And you're Managing Director of Operations and Partnerships. Do you want to explain a bit? I'm sure everyone knows Jetblue Technology Ventures, but do you want to explain it quickly?
Sure. We are a wholly owned subsidiary of Jetblue Airways. As you mentioned, we are a corporate venture capital firm, been in existence since, 2016. So just past our 5-year anniversary. We've invested in 27 startups over the course of that time. We like to think that we see all of the major travel technology startups that might come through. We've seen definitely more than 7,000 at this point in our tenure. We do invest in early stage startups. They are travel tech. We do consider that all of travel, not just an aviation focused startup. We invest along 5 different themes that range from like seamless customer journey, next gen ops, loyalty, distribution revenue. We look at accommodations and how accommodation and hospitality is shifting over time, and then lastly sustainability and sustainable travel and all of the things that will push our industry forward in the sustainability range. So that's our team. That's what we do. We're about 10 people made up of investment and operations folks. From an operations perspective, we focus on innovation programming for JetBlue as well as a number of partners, and just trying to help them figure out how to use emerging tech and how to use startups to solve everyday business problems and look for the future strategy needs and how we can shift the industry a little bit from its maybe older school legacy technology into some of the newer stuff that's out there. So that's what we do.
And what are you focusing on at the moment? I know you've got a broad portfolio.
Yes. Well, it's been an interesting, obviously, year, a year and a little bit now for the travel industry. And, I mentioned our themes. Those were the things we were really focused on coming into 2020, really starting to push the envelope on some interesting startups in things like AI and data, things like sustainability, as I mentioned. But once, the COVID crisis hit the airline industry as hard as it did, we did spend quite a bit of time last year thinking about how we could help JetBlue through the crisis and how we could use technology to kind of, make everything a little bit better, make it out of the crisis in a way that would help the airline recover faster. So a lot of things around sanitation and health and safety and, thermal scanning and UV tech and all of those kinds of things that would help address what JetBlue has been really focused on, which is safety from the ground up and just kind of recovering from the COVID crisis. So we spent a lot of time on that. We kind of morphed into a little bit more around contactless technology, which is something in the airline industry we've been talking about for a really long time, but haven't necessarily cracked the nut and really embraced a lot of the technology that's been out there. So I think this was a really great jumping point for contactless tech from a consumer perspective. It allows all of us in the industry to really kind of embrace these types of technologies because that's what customers want right now, right? So we spent some time looking at that. And now as we're kind of coming through and out of, hopefully out of this crisis time for our industry, going forward, we really, really are focused on the contactless tech. We're going to keep pushing that envelope. We are focused on reimagining accommodation. It's that's officially a theme around things like short-term rentals and how that's going to totally transform how hospitality operates and what people are looking for from a hospitality company. But probably our biggest, drive going forward is sustainability. And we've definitely come out of this last year feeling that sustainability is going to grow in importance, not decrease in importance. So it's one of our themes. It's one of the things we really, really, really focus on. It is one of the things we're really looking for interesting startups going forward in 2021. We think we found a couple of really good ones to be discussed at a different time. So that's definitely what we're focused on right now.
You can announce them now if you want. It's fine.
No, I think I'll pass.
So you invested in Joby last year, and now we see it merging with Reinvent Partners. Is this faster than you expected?
Well, we actually invested in Joby for the first time in 2017. We have long believed that Joby is a really, really just compelling eVTOL company, that they've been ahead of the game, and amongst the very, very top of this category. We believed right from the beginning in 2017 when we first met them that we think that we believe their model and their aircraft and their team are really top notch. So we've been very excited to be part of this journey with them. 4 years over multiple investments, and being that we're in the space of operating an aircraft of some sort and having customers fly on them, we're here to help them from a strategic perspective, figure out what the next step is in operationalizing, what is a really compelling, interesting use case for consumers. So we've been very excited to be part of the Joby journey. I'm really excited for them that they're moving forward with the SPAC. I'm not sure if we would have guessed that this was going to come a year ago, but I'm really excited for them that this is the process they're going through. Cyrus really talked about it quite, the way, very, very clearly, going through this SPAC process gives them the resources and the funds to go through the next couple of years of certification. I mean, that is a very real, need and a great end result from the SPAC for them. They have got, they're the first eVTOL company that has a certification basis agreed to with the FAA, and we're really excited to see that process move along, and believe that Joby has the momentum to go forward here.
I know you don't talk about specifics, but is it actually good for Joby that we're seeing other similar or other competitors looking at the SPAC market, so they're not alone on the stock market?
Yeah, it's a good question. Well, in general, the more of these types of companies that are really making headway and are accessing the SPACs that are out there and kind of moving forward into certification, and having the resources to move forward, I think is good. Of course, that means competition, but that also means that something that is new and needs to go through the certification process will have the ability to do that, right? And multiple aircraft going through this certification process with the FAA and other regulatory bodies is not a bad thing. We think that Joby isn't really well suited there, really well positioned there, but having multiple aircraft being certified means that's more of a reality, right? That it's easier for the FAA to say, okay, this is our certification basis, and this is what it's going to look like, and this is what you need to do to get certified, when there's more than one of them. So I don't think it's necessarily bad that there's competition in the eVTOL market, and that a couple other really top companies have gone through the SPAC process or going through the SPAC process as well, because again, it's resources to get to the certification perspective, or to get to the certification timeline, so that we have flying taxis for people to use, and that's ultimately the end goal. And the more the more the public sees this as a norm, the more people will fly in them. So I'm a believer. I'm excited about it. I'm looking forward to my first flight in a Joby vehicle someday.
That's great. Question from Mike Francis at First Republic Bank. Amy, how far away do you feel true commercial adoption of eVTOL vehicles is with a commercial operator?
Well, I mean, I do believe that we are on a timeline that will get us, vehicles flying with customers, albeit at a small level, in, call it 2024. I think there'll be a period of time where, the infrastructure has to catch up, the air traffic control has to catch up, that how you actually hail an air taxi, that kind of process has to be developed. And then customers have to feel safe and excited about this new form of transportation. And that takes time. Adoption takes time. But I do think that by 2024, we'll be flying in these, albeit at maybe a smaller level, but that will grow quickly over time. So I don't know. I'm a believer that it is sooner rather than later. I know I've listened to all the speeches and talks where people are like, it's 10 years away. I don't necessarily think it is 10 years away, but that's one girl's opinion, so take it for what it's worth.
Going back to your sustainability theme, what sort of investments are you looking at?
We're looking at a lot of different things around this area. And some of it, we focus on two ways, obviously, or actually, to be real, we focus on 3 different time horizons. I mean, to be very specific, some of which are very real near term usable by like a Jetblue or another carrier or another company. And some are much further out, considering the moonshots, the 7 to 10 years out. Let's see how this particular area develops. So we've been looking at a number of different things, and some of them, again, are real near term, and some of them are really far off. We talked about hydrogen. Hydrogen's very interesting. We do think it's the future of the aviation industry in some form or fashion. And what is that going to look like over the next, whatever, 7 to 10 years, as would consider that kind of a longer term investment play. So we're looking at interesting companies in that space, of course, all the way to like real near term stuff, like what are different ways to focus on carbon offsetting, and how can we help JetBlue or another partner or another carrier figure out how to, kind of expand their portfolio of carbon offsetting. And a lot of, some of our interest is around how do we better measure and report on your ESG goals. Those are interesting things that are just real needed things right now, that we can focus on, and that we would try to find an interesting company in. So it really runs the gamut between real near term stuff that we would want to do, and real, things that are considered more moonshot and more future looking. Obviously, with the Joby investment, we've been long interested in how electrification and autonomy for some of these types of carriers will change kind of the short term, shorter distance travel for customers, be it from an urban center to an airport, or maybe shorter regional travel. So obviously those are things that we're really interested in. We definitely are looking to see how alternative propulsion systems will change our industry, but also change kind of how we do business in general. All of these folks are our customers as well. So how can we, help shift the thinking in a more sustainable way in those spaces as well.
So going back to the question I asked Cyrus about the Gartner hype cycle, where would you put this industry at the moment on that?
I think I agree with Cyrus's perspective there. I think we're still, kind of on a high here. I don't see. I just think that's where we are right now. I don't know what's going to change that imminently, but I mean, I feel like things are going very well, and I think that coming out of this really challenging last year in general, there are a lot of people very excited to get out there and invest in some interesting new technologies, and there's just a lot of hype and a lot of excitement coming out of what has been a challenging year.
Yeah, I think we're all feeling that, the excitement. And,
yeah,
that's
definitely.
We've only got another 2 weeks before hairdressers open in the UK.
Okay. That's tricky.
Amy, that's great. If you could stand around, that'd be great. And then we'll delighted now to go to Dean Donovan, Managing Director, Diamond Stream Partners. Dean, how are you?
I'm doing great. How are you today?
Great to see you. And what's nice about you following Amy is you also come at the industry with a lot of expertise on the commercial side. Do you want to explain a little bit about Diamond Stream?
Yeah, so Diamond Stream's early stage investment firm. We do late stage seed, probably through Series B, and we're investing in mobility technologies, but with special focus on aerial mobility. We want to be able to invest about $10 million per investment eventually, and are super excited about the space.
So So that's how you describe your fund's mandate, is to go off, find early stage mobility.
Yes, that's right.
Anyone who has been to any of the Revolution events, and actually anyone watching or listening, the Revolution conference, which is free to attend, will be virtual on June the 21st. I've got that plug out of the way. Knows that one of the questions you always ask is about cost.
Yeah.
Your first question is always, what's the cost per seat mile, or why?
Yeah, so we think cost is the core driver of growth in aviation markets. There's, there are premium segments to aviation for sure, but typically they're about 15% of the passengers. If you look on the passenger side, cargo is obviously more freight sensitive. And really the biggest trends in commercial over the last 50 years have been growing the markets by taking costs out, because most of the market is actually quite price sensitive. And so when we think about where this market's going to grow, we get very, very focused on what the relative cost position of the sectors are, because we think that where the costs are lower than the substitutes immediately, that's where you're going to see the growth. So, we're very excited about the places where we're going to see cost inversion versus other modes early on. And we're less excited, or we're less interested in investing in places where we think it's going to be a longer ride to get to those kind of big cost improvements.
Are you satisfied that with the estimates you're getting from lots of companies?
Well, I think a lot of companies don't really know how to make the estimates. I think things are getting a lot better. The whole revolution here is starting on the aerospace side, not on the operator side. And so what you see is a lot of people putting out ideas around what the direct operating costs of their vehicles are, or how their products contribute to lower cost of operations. But they're often not looking at the entire picture. So if you look back at sort of when everyone was very, very excited about pure electric vehicles, and things have swung a little bit more in the direction of hybrids or in terms of hydrogen now, people were super excited about how cheap the electricity was, and how inexpensive that was going to make things, along with autonomy. Sometimes they didn't recognize the cost of what it would take to put the electrification into the airport, or the asset rotation that you would get when you went to something that took an hour or two to charge. And so you have to kind of look at things through the whole life cycle about how it will be operated, and not just through what will happen to a single flight. And I think people have been a little bit optimistic in terms of the kind of asset rotation they can get, and so the kind of costs that some of the vehicles that have been put out there will actually achieve in practice.
You've been very successful launching a low-cost carrier in Mexico. Do you see opportunities on the operations side?
Yeah, I think there are huge opportunities on the operations side. I mean, if you think about the two massive headaches for commercial aviation, it's maintenance and it's kind of labor utilization and labor efficiency. One of the things that we managed to do at Volaris that was very, very effective was, getting more flexible labor situations. So even without full autonomy, with what some of the guys like Skyrise or Reliable Robotics or X-Wing are doing, even if you can just get to partial autonomy in aviation, you can have far more labor flexibility and get much higher asset rotation, much lower costs. So people talk a lot about the electrification side, but I think I agree with Cyrus that the autonomy side is going to be far more impactful in aviation than it is in cars, simply because there's such a shortage of pilots versus the demand, and the pilot shortage will get much, much worse if we don't solve these issues. And indeed, I think some of the ideas that people have for next generation aviation, like drone delivery, will be completely impossible from a cost perspective to scale in any meaningful way without at least partial autonomy. So there are tremendous opportunities to wring cost efficiency out of the way that aircraft operate today in commercial for this new sector. And, the technology is there to do it. I think the question you have to ask yourself is how fast and how soon, because the risk of being too early in this sector is very, very high. And so, what we've tried to do is we've tried to focus on things that can either serve existing markets with existing technologies that have shorter certification paths, but much more important than certification in our view, although certification is very important, is how quickly you're going to see the cost economies in deployment. So you can get a pretty significant cost improvement from hybrid electric aviation right away with minimum changes to existing airspace management technology, airports, et cetera. But to electrify things in airports at scale, that's going to take much more investment. So, all of the things being equal, we go with things that are easier to do right away that get immediate cost improvements.
We've got a great question from Taylor at Aero. What is your estimated timeline for commercial eCTOL flights, passenger or cargo, so electric conventional takeoff and landing?
Yeah, so I think if you look at the retrofit market for hybrids, I think that's where you're really going to start to see fixed wing electrification happen. And I'd say that's about the same time that Amy was talking about Joby starting to fly, late 2023, early 2024. I think we're going to see the hybridization of Caravans and Twin Otters from Ampere. And when that happens, you're going to see about a 30% reduction in the cost of those flights. Now, if you take 30% costs out of a Twin Otter, if you believe the numbers, you're going to see a cost inversion with cars. And so for intercity travel, short haul intercity travel, you're going to take aircraft cost per seat mile down below the car cost per seat mile. And what that's going to do is that's going to reverse the trends that have been going on for the last 40 years around regional aviation, where cars have actually been substituting for aircraft. And when that inversion happens, you've opened up a market that is, in terms of passengers, obviously not in terms of dollars, larger. That market alone will be larger than the domestic commercial passenger market eventually. So that's a very, very exciting prospect. It'll take some time, but it'll scale at volume quickly, I think.
Do you think we should get rid of the L at the end of eVTOL and CTOL? Because I really think you should just take it for granted that things are going to land.
Or maybe we should just fly them up in the air and never land them if we get solar powered planes.
What's your view on SPACs?
Look, I think SPACs have been enormously helpful to the industry in multiple ways. I mean, there's the direct way in terms of getting some flagship companies funded, which I think is terrific. It's raised the profile of the industry, which is obviously wonderful as well. But I think there are second-order effects that are pretty important as well. So the first second-order effect I'd say is if you have a company like Joby or Archer that has to, or even Beta, even though they haven't done SPAC yet, that has to build a vehicle, they're not going to do all of that themselves. And so some of that money is going to filter into the next generation aviation ecosystem and make a whole series of other companies in the value chain much more viable and much more fundable. So I think that's very, very exciting if you're interested in investing down the value chain from the vehicles. And that I think that will create a lot of opportunity to SPACs in that respect. And then, from a funding side or from a funding standpoint, it makes it possible to envision both exits easier. So the real gap in the market is where the five people on this call are, which is sort of the earlier stage investing in the industry. And there is a shortage of capital in many parts of that market. There are parts of it that are hugely overcompeted, where the traditional venture capitalists feel comfortable. But there's a lot of parts of it where traditional venture capital is not comfortable, and the networks from traditional venture capital don't reach very well, either geographically or just in terms of personal networks. They're not part of that Silicon Valley generational move through venture capital. And, that's going to create opportunities for some of those companies to get funded because people are going to feel more comfortable that there's an industry on the other side of it. So those impacts from SPACs, I think, are very positive. Obviously, the stuff is going to ebb and flow. There will be some spectacular failures. I mean, there is no doubt. And people will probably get a little frosty on the industry when that happens. But the momentum that's underneath it, and my experience being in public markets is that the momentum underneath a company or an industry has a very powerful trajectory, but the stock market moves up and down around that in a much more volatile way. So I think we'll see tons of volatility around how the public markets feel about these things, especially for ventures that are so early. But the underlying momentum that the SPACs create is going to be enormous, and that's very, very positive for our industry and very exciting, frankly.
Brilliant. Dean, thanks so much. Great to see you. Dean Donovan, Managing Director of Diamond Stream Partners. And we're now delighted to go to Beckett Jackson, Investing Director at Boeing Horizon X. Beckett, do you want to start by explaining Horizon X?
Sure, and pleased to be here, Al, and with this esteemed panel. So Horizon X is Boeing's corporate venture capital group. We're maybe just a year behind Amy. We started in 2017, but we definitely got a lot of guidance along the way as we were standing up. And we've invested in about 37 companies, and we sort of range. We definitely like kind of some of the late seed stage companies. That's a real opportunity to kind of work together with some pretty amazing entrepreneurs. And sort of our sweet spot is in Series A. But we have gone sort of all the way up the chain. We definitely work with the companies we partner with. We have a team that sort of helps them get more adoption into Boeing. But then we also follow on with future investments, and we'll even do later stage stuff. Our focus is really on helping accelerate this ecosystem. I mean, there's just so much excitement here. We're kind of on the cusp of something. There's a lot of infrastructure. Everyone talks about the platforms, and the platforms are awesome, but there's a lot of infrastructure around it. Picks and shovels is what Cyrus said, and he was exactly right. There's a whole ecosystem, supply chain, whatever you want to call it, that's coming out, and we like to invest in helping expand that ecosystem and partnering people to help increase the adoption levels or accelerate the adoption levels. So we invest in things like mobility, whether it be sensors, clean and quiet propulsion, or kind of detect and avoid and managing the airspace. We also invest, in other areas because Boeing does a lot of different things. So space and connectivity. We invest in a lot of the things going on there around low Earth orbit, and then the future manufacturing is obviously a huge one, as this is a really interesting area to see kind of the convergence of potential for high volume aircraft manufacturing, which is something we haven't really seen in a long time. So that's kind of a quick snapshot on us.
And one of the first aerospace companies to get bought by a SPAC was Virgin Galactic, which you were an investor in. How did you find the process?
Well, the first thing we did was we were sort of in discussions with the team for a while there around partnerships, and we were sort of thinking about investing, and then Chamath Palihapitiya walks in at the sort of 11th hour of his SPAC, which had been started about 2 years earlier, and so the clock had run out. And the first thing we did was we went to our I went to our lawyers and said, what's a SPAC? What's the protocol here? I'm going to have to get back to you. So, I mean, it was really, and what I've learned since then, obviously, is the history is, these were the companies you didn't touch with a 10-foot pole, back 20 years ago. And now it's been just completely reframed into this tool, basically, to fill the gap of what Dean said. There's all this wonderful, there are these new applications of hardware that is really exciting for the world. And because Silicon Valley is focused so much on SaaS businesses, there's just, it's really difficult to get the capital required because there's so much more capital needed for a hardware business than a software business. So, for us, we think this was, extraordinarily helpful for Virgin Galactic. I mean, this is what sort of set them on the path to being a true commercial company. And I think there's a lot of others in the space that are going to need this. But the process itself was honestly somewhat easier than just a typical Series A. It was super quick. Everything was really made nice and easy.
As a strategic investor, and I could have asked Amy this, is exit as important to you as it is to traditional VCs?
Sorry, what?
Is exiting as important to you?
We are a strategic and a financial investor. So we invest in companies where there's an obvious path to partnering and supporting some of the things that we're doing that is sort of mutually beneficial. We also have to be, prudent investors, with Boeing Capital here. So, we will make bets that sort of meet both of those objectives. The typical venture capital standards on returns are things that we definitely look for, but we also look for that, engagement at the Boeing side.
And you talked about your 37 companies. Same question to you as Cyrus. Is there anything you're particularly excited about at the moment getting presented to you?
Yeah, so...
I'm sorry, I thought that was a question for me. I apologize for coming back in.
Oh, no. I'll build off, what everyone else here said. So what Cyrus said about the future of sensing, it ties directly into certifiable autonomy. That is critically important when you think about, how to get a true FAA certified vehicle. That is just, absolute. And we've seen a lot of interesting companies doing stuff like that. I think a lot of people don't realize, but actually autonomy is actually a lot easier in the air than it is on the ground. And I think watching that certification process will be fascinating. That's one element. Another element will be what Dean said, which was, and this is a stat, is probably, I've overused this stat, but it's a great one. So like 97% of air travel currently goes through 3% of the airports in America. That is an astounding number, and it basically means that we have these massively underutilized assets. And as to Dean's point, as cost comes down, there's going to be just a massive increase in availability of new modes and new routes of transportation. We're seeing a lot of stuff there, especially around electric propulsion. So that's a really interesting area. And then finally, I'll say, and also hydrogen. We're seeing a lot around hydrogen that's also pretty interesting. But the final thing is, and it's boring, but it's infrastructure. It's vertiports. It's how do I refuel an electric aircraft? How do I know when the battery has degraded to a certain level that I need to replace it? What's a fast swap look like? What does a fast charge look like? It's all of those sort of nitty gritty on how things work. There hasn't been, since we're near opening day, I'll say we're in the very early innings of that, and I think it's going to be a really exciting area to watch, even if it's not sort of the area people focus on a lot.
Okay, same question to you that Amy had. What's your date? This is Mike's question. When we'll see true commercial VTOL?
True commercial VTOL. I mean. The interesting thing, I'm not going to have anything that's that much more insightful to say than the others, but I think the one add I will make is that I think what you're seeing is in some other sort of consumer markets where there's such a dramatic reduction in cost, you're seeing adoption from the low end of the market. And I think in aerospace, because of the capital intensity and because of kind of the coolness factor, the best car in the whatever you want to call it, there's definitely a move now to starting at the high end because there's pricing elasticity at the high end of the market, and it's a good area to kind of figure out the unit economics where you have customers that aren't as sensitive to price. And so I guess I think that you'll see some pretty quick move to commercial operations in that smaller segment of the market very, very soon. I mean, 2024 sounds about right. It's really the big milestone is going to be, certification and certified maintenance, by the way. People don't think about that a lot, but certified aircraft are going to need certified maintenance, and we're going to need to figure that out quickly.
That's brilliant. And Becky, same question to you about the Gartner hype cycle. Are we still climbing up?
We're still climbing up in my mind. I mean, look, I could be wrong here, but when you see these companies, there just wasn't this type of capital available to these companies before. Now there is. The narrative has been around, not what's my EBITDA, it's around, am I meeting my technical milestones to prove that there's hope for my future earnings. And so, I think we're gonna keep climbing. I think honestly that the biggest factor here maybe just treasury yields. If those start going through the roof, we're going to see cost of capital increase, and people may pull back from this whole thing, and you may really struggle with some of these. But my hope is that does not happen, because I think that there's a net positive here, especially what Dean was talking about in terms of all that capital flowing into the value chain and watching some of these other companies grow that we haven't really talked about yet, but we will very soon.
Brilliant. Thanks so much, Beckett Jackson, Investing Director, Boeing Horizon X. Last but not least, absolutely delighted to have Uman Yazari, founding partner of Mobility Capital. Uman's got a really interesting background. You've been in aircraft leasing. You've been at one of the world's largest helicopter operators. You've been at a helicopter lessor. You've focused a lot on restructuring in your career. Is this a change?
Well, after all that SPAC money coming into this industry, I hope that it is a change, yes. I thought I'd walk towards an industry where the cake is growing rather than shrinking. And we see the momentum here, and I think it's a wonderful opportunity to be involved in any way that my fellow panelists have discussed already.
Do you want to explain a bit about Mobility Capital?
Sure. Mobility Capital's vision is to deploy capital towards a world where humanity's mobility, logistics, and transport systems are sustainable, inclusive, and resilient. And Amy talked a lot about the ESG angle in transport. And if you think about an area of our sort of global society that adds the most value economically as well as from a humanity perspective, it's our transport and logistics system. And at the same time, it's unsustainable, it's dirty, and it's not resilient. And the mirror that the COVID pandemic has shone on our system shows us that it can do better. And the technologies that everyone is talking about today, as well as our society's need to make our businesses more accountable and better at doing what they do in terms of that sustainability, I think is gelling in the world that we're all talking about. So we envisage, in addition to the requirement for that sustainability, capital being important to this industry as well, right? And we talk about the any transport business that needs to scale. Yes, there's a ton of money that you need to get to the stage where the FAA approves it. You've got your factory, you're building, but actually, if you want to create a fleet, if you want to create an infrastructure, an ecosystem, a scaled network, you need non-dilutive capital. You need debt financing, you need leasing financing. So we're combining that vision of as impact investing that I've also been doing for 10 years outside of the transport world with this industry's requirement for other types of capital than pure equity.
And so what's your what sort of investments are you targeting?
You know, it's interesting. We're a clean sheet, right? So we haven't got a legacy background. And given that we would like to deploy credit type capital, we have to look at things that are already ready to generate a return, proven technologies, approved technologies. So the eVTOLs and the CTOLs, et cetera, that everyone was talking about, I think would be a little bit further down the pipeline for us, given the returns and the cash flow that we need. However, some of the picks and shovels in terms of the batteries, in terms of the infrastructure, in terms of the electrification, picks and shovels, we look at that. And in all candor, we also are looking a lot at terrestrial and marine transport. So looking at the electrification of mass transit, looking at shipping containers that are 20% lighter and much more artificially intelligent, therefore bring efficiencies to supply chain, a pretty broad-based urban mobility, electrified assets too. So we've got a pretty broad lens at the moment.
Are you also looking at distressed assets out there in, say, commercial aviation?
Yes, but not with my mobility capital hat. There's a lot there, as you can imagine. We've got a global fleet that's too big for the demand and a lot of levered assets and businesses that need fixing. So that restructuring world is going to be busy for a while.
What attracted you? There's so many options out there for excitement, and you could have done an ESG fund. Why mobility?
Because I believe in its importance to us as a civilization. I'm a kid. I was born in Iran. I lived in 10 different countries by the time I was 15. And I've been lucky enough to have jobs that allow me to travel. And I think the system that allows us to unite as a humanity make the world a better place. They just need to be more sustainable.
Okay, and let's just talk briefly about venture debt, which is, you're getting claps there, which is nice. Talking about, and venture debt, are you looking at in this, how do you make a venture debt deal close?
It's interesting. I used to be in the helicopter leasing business, and there's some similarities, right, where many helicopter operators are smaller, less institutional, and perhaps more dicey on the sort of credit scale when you're trying to see what the risk reward is to deploying capital towards them. The skills there, I think, are quite transferable to venture debt, where one, you've got an asset which is able to provide some kind of return, but not yet scaled and proven and having a 3 to 5 year operating history with residual values and yields being proven like you would in aircraft leasing. However, if you've got something, whether it is a giant equity cushion behind your venture debt, or it is a contract with a good credit external party which you can take a lien over, you can start to deploy capital. And it's in everybody's interest, I think, to avoid that extreme dilution that comes with more and more and more equity. So I think it's a win-win. And obviously, you're going to be a little bit more guarded. So that means your tenor is shorter than perhaps a 5-year loan to an airline, or your size is smaller when you compare that to how much equity they have.
Heyman, that's great. So that's Heyman Yazari, Mobility Capital. Let's, if we could end quickly, is there anything that any of you would like to raise with each other? Or anything that resonated? Dean?
I didn't have anything off the top of my head, but,
I got one.
I wonder how we all keep talking in a way that allows us to keep up with this incredible pace of change that we're seeing, so that we can be as most help as we possibly can to the industry that we all love.
Revolution.Aero Town Hall.
There you go. I'm curious. I'm curious how the hardware businesses are going to get funded, because the strategic investors typically don't have the big checkbooks to make this happen. The venture investors, traditional venture investors, are reluctant to fund hardware-related businesses. But the hardware-related businesses are ultimately the core driver of success for the industry. And the software businesses build around kind of the assets of the hardware businesses. And so I don't know if any of you guys have a perspective on that.
They're all going to come from Mobility Capital. We're going to provide them leasing and secured debt and securitization vehicles, all the stuff that we use for airlines. We're ready to go.
But you got to build them first. Before
that's
you
the problem.
release them.
That's
a great point, Dean. I mean, it's interesting. There's a company that I'm working with that's we're dealing with that exact issue. And the problem is that when they go to places, it's a typical lending facility is, and it's fine if it's secured, but it's, personal guarantees on the back and all these sort of arcane terms. There really is not a strong, pool of capital that's really focused on hardware right now. I think it's emerging with some of these sort of crossover funds that are doing some things. But I have to tell you, what I'm seeing, and I'd be curious to hear Cyrus and Amy and Dean what you're hearing. But I mean, my sense is that it's really like, how do you piece together a Series B when you're still kind of trying to get that product market fit, because the stages are so much later for hardware companies than software. Or you're going to go the SPAC route, and you're going to have to, have the best story possible that the market can really digest and understand before you're really ready to be a public company. So it's a conundrum, Dean. I agree with you.
Yeah, it's challenging, right? And
got a question from Graham Stevenson. You mentioned infrastructure. What about infrastructure, airports for rapid recharging of electric aircraft and production of hydrogen? Will we have vehicles with nowhere to go?
I mean, I think everybody's talked about the fact that infrastructure is a piece of this puzzle that has to be solved. And certainly in the airline industry, as we build out, new airports or retrofit older airports, that's definitely something that's become a part of the conversation, is how do you use space like parking garages that really just don't see a lot of traction anymore or use anymore? How do you change that into kind of like the vertiport style, charging station and a place for customers to catch air taxis, right? So the infrastructure piece, I think, is going to be really key.
Great.
Look, there's huge pools of money out there for infrastructure, right? I mean, there's guys out there like Macquarie and others that just have billions of dollars. Carlyle, they have billions of dollars for this stuff. I think the challenge for infrastructure is, where's the volume? Because nobody wants to put $100 million into an infrastructure project when there's no volume. So I think it all comes back to, like, how do you bootstrap the volume up? And low volume stuff isn't going to get it done with infrastructure. Nobody's going to spend money on it unless you've got a lot of people moving through a facility. And so to me, it's not the infrastructure itself that's the issue, because that stuff can get built out. You might have to fight for 10 years in a secondary airport with the local community, which we've all seen. But can you actually deliver the people or the freight or whatever it is that is going to move through that facility?
Dean, it's a good point. There was a really interesting article in Bloomberg on Rivian, and we've also studied the charging infrastructure for EVs. And you're right, they don't make any money. There's not enough people sort of putting gas in the tank to actually pay for that. But Rivian kind of is rolling out this incredible network to allow people to be comfortable to buy their vehicle. So I wonder whether the eVTOL businesses are also going to have to use some of that SPAC money, not just to build their airline and to build the certification, etc., but also to build all the landing and the charging infrastructure. So there's a lot more capital needed, and some of it is going to take a much longer time to get a return on it, because it's that charging infrastructure rather than the sexy ticket selling infrastructure.
Okay, last but one question from Daryl Swanson. Does anyone expect to see SPACs invest in infrastructure? No. No one's jumping.
I don't think so. And here's why. The big advantage of a SPAC versus an IPO or a fund is you can make these big forward-looking statements, right? And so forward-looking statements for infrastructure, like, you're going to have to see the demand, I think, to make that work. So I don't see SPACs having a differential advantage over these large pools of capital for forward-looking statements like public markets are for something like an Archer or a Joby. That's just my 2 cents.
Yeah, actually interesting. Blade is being bought by an infrastructure investor, SPAC sponsored. Okay, thank you so much to everyone. It's been brilliant. If anyone's interested in raising funding, please contact the people on this panel. We've got some great questions which we'll address in future ones. Thanks so much for joining us. We'll see you in a month and also in June for Revolution.Aero Global. Thank you and goodbye.
Thanks, guys. Always great to see you guys.